I had a little bit of a hic. I literally just got scared for a second. Did anybody else see the countdown just freeze? I was like, oh my God, what am I going to do? Holy shit. Well, anyways, that was enough to wake me up this afternoon. I hope you guys are awoke as well. What's up, everybody? Welcome to Own the Chaos. My name is Brad. The stock market is crazy and chaotic, and I made my mission to help you guys own it. For those of you watching on Twitter, this is my first simulcast on Twitter. I've done simulcasts before, but on Twitch and YouTube, not really, I don't think anyway, YouTube and Twitch. Now, what I will say is that I'm simulcasting, and I wonder if that is creating this lag. We're going to continue to see if this actually creates an issue. Yes, Snookeroo, I'm yet again in another studio setup. We'll see how this goes. I'm not a huge fan of the green screen, but we'll see how this continues to flow. We'll see. I don't know. I'm not a big fan of it, but I appreciate the kind words. Nevertheless, am I in a bathroom? No, I'm in a garage. I'm in a garage. Yeah, thanks. I'm not a huge fan of it either. Like I said, I don't dig the green screen a whole lot, but hey, I got to do what I got to do. Going Don Franz style, says Tiger's Edge. Yeah. We'll see how I can figure this out. Like I said, this is better than just looking at a garage wall, I guess. We'll figure it out. Me and Jaime gonna tackle it. But hope you guys are all doing well. Looking at the markets right now, and it is kind of flat for the most part. It's been red for most of the day, but the S&P is down 0.5% or good for 19 points. The Dow's down 53 points. Not a big deal. The Dow's on pace to have its best month of the year, I believe. NASDAQ is down another nearly 1%. Russell 2000 is actually green today, up a quarter. Crude oil is also down 2%, sitting at $86.19 of WTI crude. Looking at Bitcoin, that is also in the red, down 1.33%. So it's a pretty red day, but it's not like we've seen redder, that's for sure. We have earnings that are coming up. We have Avis Budget Group, as well as Goodyear, Flowserve, NXPI Semiconductors. These are all stocks that we're going to be, or that I'm going to be reacting to. If you guys are curious about how you can get more access to Own the Chaos, make sure you're hitting that subscribe button and that notification bell, as I do go live from Monday through Thursday at 3:45 p.m. Eastern time. But also check out the link in the chat. If you guys want to go be a part of the Chaos crew, you can also click the link in the chat as well. That is over at patreon.com/ownthechaos. Would love for you guys to be a part of the crew as well and help support the channel in that way. Let me get started on my starting five here. Bodie Beard, I see you, bro. Thanks for showing up early. Kevin Hawthorne, Gabriel Navarro, Snookeroo, and Savvy Money Show. You guys are my starting five. As I'd mentioned before, if you are not subscribed or hitting that notification bell, it's probably because you probably didn't hit that starting five as a result. So make sure you're doing that as well. I fucked that all up. I'm so sorry. I had a good flow going, and then I screwed all that up. But anyways, how's the guy who picks up some AR? I don't know. I don't know who that guy is. Okay. So we do have some earnings, as I'd mentioned, coming up. We're going to cover those as well. The Fed had a unexpected or unscheduled meeting today. The meetings are going to continue tomorrow, and Wednesday we'll hear about interest rates as well. This is all going to impact a lot of things, right? I think that tech in particular is going to be hit the hardest, and that's why we've seen the NASDAQ get absolutely hammered. One reason, I should say. None of the big tech companies have done well either. We got through the FANG stocks, and it wasn't pretty. It's interesting, right? Because before the FANG stocks reported, things actually kind of looked a bit bullish. I don't know where we stand right now. I don't think that it's necessarily bullish, but I think that the depression in the markets and some of the prices that are coming down in certain areas could certainly create maybe a shift in what the Fed's going to do. I'm not, like I said, sold on going bullish yet, but I think that a 50-point rate hike compared to the 75 points that we're going to be expecting could create more of that bear market rally type of situation. And you guys know me. I mean, I tell you all the time, it is one of those things where I think that it makes sense to start dabbling a little bit. If you're sitting in cash, or if you have been sitting in cash, if it were me, and this is what I'm doing, I'm starting to dabble a little bit more, buy some more speculative type stuff, and even the non-speculative stuff. I'm not saying going all in, but these are prices that we haven't seen in 4 or 5 years. So on certain stuff, Meta Platforms being one of them, and a few others. So I think that, like I said, I'm not saying to go all in, but nobody can time the market, and I think that this is certainly risk versus reward in certain areas is going to be pretty darn good. We got SoFi that's going to have earnings this week, as well as many others. DraftKings is reporting. None as big as the Apples or Googles of the world, but we still are in the thick of earnings season. So, guys, as I mentioned before, make sure you hit that subscribe button, hit that notification bell, and I would love to have you guys a part of the Chaos Crew as well. If you hit that link in the chat, it's pinned to the top of your chat. If you guys haven't checked that out already, I would love it if you guys did. So, thanks so much for doing that in advance if you haven't done already. All right, looking at earnings that are expected today. So, Avis. Let's go ahead and move over to the chart here. Here's your Avis chart. Now, this is very interesting. Avis budget is green on the year. It has been outperforming the market, and it's been pretty awesome to see. It's up. Let me go back here real quick. I can give you it is up over the last 52 weeks, 38%. Year to date, it's up 17% compared to the S&P that's down 20 plus. So 40% difference in performance, 40 plus percent difference in performance from Avis Budget Group, which is pretty wild when you consider some of the other car related or automotive related companies. Last time around, they beat by a mile. They came in at $15.94. They beat by $4.11 on expectations. $3.24 billion was the revenue last quarter. They came in and beat that as well, 93.53 by $93.53 million. This time around, they're expected to come in at $14.64, $3.54 billion in revenue. Analysts upgrades are 3 to 1. Not too many revisions here on this. So upward revisions are 3 to 1 as far as analysts are concerned. And this is one that I think is worth some of your attention. Why? Because we could be seeing car prices get beaten down. But somehow Avis continues to just crush it. Over the last 2 years, Avis has beaten earnings per share estimates 100% of the time and has beaten revenue estimates 88% of the time. Over the last 3 months, earnings per share estimates have seen 3 upward revisions, as I mentioned, and 1 downward. Revenue estimates have seen 2 upward revisions and 1 downward as well. And I think that this is, it's just interesting. We'll come to the 5-minute chart. There isn't a whole lot of volume with this, but leave me some comments as to why. Is this just more or less of a, I don't know, cult like following? Why is it Avis? And how are they able to do so well performance wise? You look at the short interest on this, it is at 18%. That's pretty damn high. So it could have something to do with it. It is cheap. Forward PE on this is at 5 times next year's earnings. So there is some things to like about Avis. They are profitable and they are cheap from a valuation standpoint. Market cap's at $11.7 billion. I mean, there isn't a whole lot to hate about it other than the fact that the industry itself just isn't doing well. Yet somehow this company is. So again, up 17% this year. That's pretty wild to me. Pretty wild. Okay. Moving on, we have Goodyear as well. Goodyear Tire and Rubber. That ticker symbol is GT. Goodyear Tire and Rubber is scheduled to announce Q3 earnings today after hours. And the consensus earnings per share estimate is at 55 cents. Revenue estimate is around $5.34 billion over the last 2 years. Goodyear has beaten estimates 88% of the time and has beaten revenue 100% of the time. Over the last 3 months, earnings per share have seen 4 upward revisions and 1 downward. Revenue estimates have been 3 upward and 1 downward. I think that Goodyear stands to do well too, only because of not because of car demand necessarily, but EV demand. It's not just ICE vehicles that Goodyear benefits from, right? There's a few things that EVs and ICE vehicles have in common. One of them is brakes and tires. Well, that's 2 of them, I guess I should say. That is 2 of them. Goodyear is down 41%, almost 42% year to date. Over the last 52 weeks, it's down 38%. And forward PE on this is at 6.5 times next year's earnings. I'm going to say that I like this stock right now. We'll see. Let me know what you guys think in the comments below. Would love to hear from you guys on that front as well. But you look at the valuation of Goodyear and potential demand for this, especially as EVs continue to rock and roll. I don't know. I like this one too. Let me know what you guys think. All right, moving on. We have Flowserve, ticker symbol FLS. FLS, not I don't know what LFS. Flowserve having a damn good day today. It's up compared to the rest of the market. It's up about 0.5%. This is also obviously a stock that's been depressed, but we've seen a double bottom on this on the daily chart as well. The consensus estimate here is at 24 cents. And revenue is estimated to be around $868.17 million over the last 2 years. Flowserve has beaten estimates 38% of the time and has beaten revenue estimates 38% of the time. So not great, not a great track record. I'm not quite sure what Flowserve has to do to beat earnings. It's been the performance here hasn't been great, but it's outperformed the market. It's only down around 7% over the last 52 weeks, only down around 14%. Now that might sound like a lot to you, but when you compare it to the S&P 500, it's actually still outperforming it. So if you're not familiar with what they do, they design, develop, and manufacture and distribute services in the industrial flow management equipment. So supply chain, that sort of thing, logistics. FBD segment offers custom and pre-configured pumps and pump systems, mechanical seals, auxiliary systems, replacement parts, upgrades, and related aftermarket services, including installation and commissioning services, blah, 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 blah. They're headquartered in Irving, Texas. Looking next is NXP Semiconductors. NXPI is the ticker symbol there. That is down around 3.5%. Estimate consensus here is at $3.66. Revenue is expected to come in at $3.43 billion over the last 1 year. NXPI has beaten estimates 25% of the time and beaten revenue estimates 75% of the time. Yikes. Over the last 3 months, earnings per share estimates have seen 19 upward revisions and no downward ones. Also interesting to note. Saw a recent bottom down here at 132.08. We'll see where this goes. There's been quite a few bullish formations happening here. After topping the consensus mark in Q2, the company provided Q3 guidance of revenue in the range of $3.35 billion to $3.5 billion, non-GAAP gross profit margin of 57.3% to 58.3%, and non-GAAP operating margin of 35 to 36.7%. So, you know, we've seen some of the semiconductors really get beaten up over the last I don't know, several months. I mean, really since the beginning of the year. It's since November of last year. It's been pretty crazy. Bodie Beard asking about weed stocks. Yeah, this happens every time. Every time it enters into the legislation. Have we actually seen news on this? Is it actually passing? Has it passed? CGC right now is up 18%. Listen to me, okay? I'm not saying that you shouldn't go after the weed stocks right now, but I mean, come on. I really don't know how long this is actually going to last. We'll see. CGC closed up 18.5% today. You look at Schumer says they have a deal coming. They've been saying that though. I mean, and maybe they'll do it because they have, the election's what, tomorrow? Or yeah, tomorrow? Is the election? No. It's soon. I don't know. I can't keep track of my days. But either way, midterms. I can't believe tomorrow is November, by the way. It's insane. Midterms are this week. And so I just think that it behooves them to get something passed. Maybe they'll pass something, maybe they won't. But nevertheless, I don't think it actually does much. Yeah, election day is next week. So I think, I don't know. Sure. You want to go after some weed stocks, knock yourself out. If there's one that I would invest in, it's CGC, but the rest of them are absolute shit when it comes to dilution and the amount of money they need to continue to survive. At least CGC has the backing of Constellation Brands. None of the other companies out there can say that. Here's your daily chart on CGC. It was at $56.50 February of 21. And now it's at 373. Whew. I mean, that is just. Or here's Aurora Cannabis. Same shit, different day with that. How many more reverse splits can we go through on that one? Tilray up 12% today. That was at $67 back at its peak that we saw. Not its peak, but recent peak back in 2021. I just can't. I can't in good conscience be like, oh yeah, cannabis stocks, they're going nuts right now. No, I mean, whatever. We've seen this song and dance before. I just can't get excited about them anymore. I really just can't. So anyways, market's officially closed. It's 4:02. Let's take a look see what's moving right now. So NXPI is the ticker symbol there. That stock, let's go back to the 5-minute chart. That stock started to move down. It looks like maybe those numbers are out. Remember, this one didn't have a great track record as far as earnings expectations and meeting them is concerned. Take a look here. So it looks like they are out. All right. So NXPI revenue was up 3.45 billion. NXPI's estimated revenue was expected to be around 3.43. So they came in and beat on earnings per share year over year. That's a gain of, or year over year growth, of over 20%, 20.4% year on year. And GAAP gross margin was 57.1% and GAAP operating margin was 29.1%. Cash flow from operations was 1.14 billion. Looks like they missed on earnings per share. Let's see here. I'm just going to put this in my little banner here. Okay. Above the midpoint of our guidance range is what NXPI is stating. August 26, 2022, NXP, together with NXP Funding, amended and restated a revolving credit agreement and entered into a June 11, 2019. The amended and restated revolving credit provides 250 million of senior unsecured revolving credit, blah, 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 blah. Stock is still getting crushed now. It's down around 2.6%. Okay. Housekeeping, I like this. Just buy Marlboro instead of weed stocks. Big tobacco will be in the weed business if it legalized. 100%. Yes, Philip Morris, just go buy it. Some people have feelings about it, and that's fine. But just go buy it. Here we go. There's your NXP numbers. Let's check back in on Avis. Ticker symbol is CAR. That stock is popping right now. It's up 4.5%. Looks like it was up much higher than that on the reaction. Let's see what I can find here. Revenue came in 18% above third quarter 2021 at $3.5 billion. So as I had mentioned, Avis, the expectation there for earnings was at 3.54. So it looks like they came in under expectations slightly or in line there as far as revenue is concerned. Net income was $1 billion. Adjusted EBITDA in the Americas was $1.2 billion. Adjusted EBITDA in international was $291. Liquidity position was $1.7 billion. $21 versus the Jesus Christ Almighty. $21.70 was the actual earnings per share versus the $14.63 estimate. Sales came in at 3.55 versus the 3.49. This is the 3.49 is another revision or estimate that we have here. That is an incredible beat. I'm putting this one up too. Hold on. Let's see here. That is an insane beat for Avis budget. Good God Almighty. Jesus Christ. That is insane, guys. Absolutely insane. There's your car, your Avis budget numbers there. Jeez, a whiz. Stock's still doing pretty well. It's up 4.25%. It was down almost 3% today, so it's more than made up for today's down day. We'll see if this continues to move up. But here's your daily chart. I mean, bull flag pattern all day long on the daily. I don't know where this actually ends up going. 247.89 is where it's sitting at right now. So it still has a ways to go before it gets to the peak that we saw just recently back on the 26th of this month. But if it breaks above that, it could start to do really well. It's pulling back here a little bit some. We'll see where this goes, though. There's your 5-minute chart back on Avis budget. See if I can find some more stuff on this one. All right, let's see here. If you guys are just tuning in, I just reported on NXPI and on Avis budget. Avis budget knocked it out of the park on their earnings. $21.70 versus the $14.63 estimate. Sales came in at $3.55 billion versus the $3.49 that was expected. Here's a summary. Part of the summary here says that Avis is quoted as saying, "We are charging our customers 80% more per day for cars that are fully depreciated." Jesus Christ, that is crazy. We're charging our customers 80% more per day for cars that are fully depreciated. The cigarette odor and stains on the seats are features, not bugs. That's never mind. I was like, what is this? Let me take that back. I think that's a that's a joke. I was like, what? What is this shit? Hadidra Bosa moment, guys. Sorry. Comment if you know what I'm talking about. I was like, I was like, I couldn't believe what I was reading. And then turns out that I shouldn't have. Housekeeping says Avis is better than Fang. Avis rental partnership with Uber. Every Uber driver gets their car from Avis renting Tesla. Oh my God. All right, let's read it some more of the Avis earnings here. We ended the quarter with revenues 18% above the third quarter at $3.5 billion, blah, 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 blah. Net income, yeah, we know that. The CEO says, "I want to thank all the employees for their traffic efforts in helping us deliver the best quarterly results in our company's history." That's from Joe Ferraro, the CEO of Avis. Despite growing concerns around economic slowdown, our strong summer performance, driven by increased demand in both the commercial and leisure segments, carried us through to September. We remain optimistic this will continue through the fall and to the holiday season. Investor conference call is going to be tomorrow at 8:30 a.m. That's a little bit unusual, so don't look for it tonight. Avis Budget Group has more than 10,000 rental locations in approximately 180 countries. just looking at some more on the summary data sheet, there isn't a whole lot more to like, although the stock is continuing to rip up here right now. It's now up over 8%. And again, that was just a monster beat on earnings. I mean, the profitability from Avis right now is just unbelievable. Over $21. $21.70 was the actual earnings per share. The estimate was 14 and change. So just absolutely crushing it. Absolutely crushing it. Revenue came in just slightly above expectations, but the profitability is the big story here. I mean, good Lord. Absolutely nuts. What a wild beat from Avis. Got a couple other ones that are reporting here, so I'll come back to Avis to check in. Let's see if Goodyear has started reporting yet. It doesn't look like that one's out yet. Let's see, Marriott. Somebody was asking about Marriott. It's not Marriott Internet. There it is. Marriott Vacations Worldwide, which I'm guessing is like a subsidiary. There's nothing there. Nothing. BYND. Is BYND today? I didn't think so. Beyond Meat? No way. I didn't see it. That doesn't mean that it's not true. Stock's up 1.5%. I can check. Let's see here. I don't see BYND today. Nah. I didn't think so. Okay, so we covered NXPI, we covered Avis. Flowserve was another one that was reporting today. FLS is the ticker symbol there. No real movement on that one either. So those are your two that have reported so far. Again, Avis Budget is the one that absolutely knocked it out of the park. Come back to that stock right now. Now gave back some of its gains, but not a whole lot. It's now up around 8% after hours. Just an unbelievable beat. I don't know what about Amcor. You can ask me a bunch of times, but I don't know. What about it? Ivan Broski, Airbnb is this week. That's going to be on Wednesday, I believe. Tuesday or Wednesday. Snookeroo just tomorrow. Okay, yeah. Tomorrow after hours is what Airbnb's is. I knew it was tomorrow or Wednesday. I actually covered it for my Stock Watch Sunday group over at patreon.com/ownthechaos. The link is in the chat if you guys want to go check that out. I did cover Airbnb this week for if you guys are interested in that. It's literally $5 a month. Just help support the channel. I certainly would appreciate it if you guys are part of the crew. Ivan Broski is. I appreciate you, brother. And yeah, so if you want more info on that, go check out this week's Stock Watch Sunday bit over there. Aflac reported today. Yeah, there's a couple other ones. I didn't really think anybody was interested in Aflac, but if you really want me to cover it, by all means, I will. Stock's down 2%. Let's take a look here. AFL is the ticker symbol. Are you guys actually invested in this, or am I just wasting my breath? I'm just fucking with you. It looks like they missed by 7 cents. They came in at $1.15. Revenue came in at $4.82 billion. They beat the revenue by $240 million for Aflac. And there is Aflac Insurance numbers right there. The stock is now down 1.7% on mixed results. For Aflac came in and missed on earnings per share, and then came in beat on revenue. Let's see what else I can find in here. $4.8 billion is the revenue number. That was compared to $5.2 billion in the third quarter of 2021. So lower revenue numbers compared to year-over-year numbers. Net earnings were $1.6 billion, or $2.53 per diluted share, or $1.32 per diluted share. It's according to Stock Titan. Net earnings for the third quarter of 2022 included net investment gains of $199 million, or 31 cents per diluted share, compared with net investment loss of $1.71 or 25 cents per diluted share a year ago. So slowing of growth there for Aflac, and that's why the stock is down around 1.7%. Not really a big deal for them. Marriott. Why is everybody saying Marriott? It's not Marriott, is it? It's like Marriott Vacations. Yeah. Yeah, I don't think it's Marriott. That's MAR. I think what you guys, and maybe I'm getting confused with it, but I was looking at the calendar today, the earnings calendar, and Marriott is not on there. It's Marriott Vacation Resorts or something crazy like that. I've never really. Yeah, there's no earnings for Marriott today. I think you guys are getting a little confused here. Yeah, that's what I thought. Ivan Broski says Nikola's up 19%. Let's take a look at that. Why is Nikola up 19%? Oops. KLA. Oh, it was up at 19% today. Yeah, I don't know why. Was there news on this? Are they getting into the weed business? Would probably be better for them. Oh shit. Yeah, I don't know. I don't know why it was up so much today. That's a good question. Okay. Checking back in with some of the other ones that we were waiting on. Let's see if Goodyear's got anything. Doesn't look like Goodyear actually did much of anything. I don't know if this report's out or not, or if this is just no. Earnings aren't out yet for them. We can check out Flowserve, FLS. Nothing going on there either. Check back in with Avis. Your symbol CAR. Stock's up 7%. It's giving back some of its gains a little bit, but nothing too crazy there. It's still a hell of a day and a hell of a beat on their earnings. They came in at $21.70 versus the $14.63 estimate. Sales came in at $3.55 billion versus the $3.49 that was estimated, and just absolutely killing it. I'll tell you what, since things are slow, let's do some shit or legit. We haven't done shit or legit in quite a while. Let's go ahead and do that. So put shit or legit and your favorite company or the stock that you would like me to take a look at. It's like this. SOL and your ticker, and I would love to react to your guys's stocks that maybe you have that you would like to take a look. You would like me to react to. First one, I'll just go ahead and oblige and nice here. It says AMD predictions. Let's take a look at the chart here. Semiconductors have been absolutely just pummeled, with the exception of recent movement on CapEx spend from Meta. So AMD and NVIDIA have really kind of continued to move up on some of that news. Meta Platforms talked on their earnings about increasing their budget and CapEx on data center usage. Not really much of a surprise, considering they're going to need more data centers for their metaverse play. So we saw AMD and NVIDIA, and actually Don Fran from the Don Fran show was on that stream. We were talking about it, and we just immediately saw, after the Meta Platforms earnings release, NVIDIA and AMD skyrocket on that. There could be something there. I don't think that AMD or NVIDIA has actually commented on that, whether or not that Meta's reached out to them in any capacity, but that was the movement there. AMD's PE has now come down to levels in line with the S&P 500 at 16.96 times next year's earnings. Market cap's now down to $100 billion. I'm not going to say that it's actually, I don't even know what to say. It's neither cheap nor expensive, I guess is what I'm trying to say. I would say that it's just okay right now. I think that there's a lot of bearish sentiment revolving around AMD. The estimated earnings per share is 70 cents. $5.65 billion is expected in revenue. Only one upward revision out of the 28 analysts out there. So 27 of them were downward revisions. That's pretty crazy. Here's your daily chart on AMD. And the only thing I could say about it positive on a positive note is that we're seeing some higher lows. So it's got a decent looking trend here right now since its bottom at 54.57, closed the day at $60.06, starting to move up slightly, but I still would be nervous to play around with the semiconductors until we see like a true change in direction. Maybe it starts to get exciting once we get it above $70 and some change. Here's your $70 mark, which is also representative of the 50-day moving average. So those are that's I guess a couple of good things maybe to just watch out for. But yeah, their earnings for AMD, I believe, are tomorrow after hours as well. So this is going to be something to keep an eye on. Don said Meta got re-indexed from 5% to 2.5%, which is why it took the beat down, but still mostly institutionally owned. They're pulling out for metaverse risk. Yeah, which is actually Jay Santos asking about Facebook. Asadane asking about Meta. So let's take a look at that. Meta Platforms is down another 6% today after being down all year long for almost an entire year. It has just continued to get crushed. And you guys, I'm not changing my tune. I know a lot of you have kind of given me some crap about Meta Platforms and my view on it. And listen, I think one thing that I've been pretty emphatic on was that it can go lower, and I've gone on record as saying it can go lower, and it probably will go lower. If you guys recall, I talked about this $71, $72 area that we pointed out just last week off of their earnings. It doesn't change my sentiment, though. If I'm looking and I have a longer time horizon for Meta Platforms, I still say it's cheap. I'm not saying that you have to go all in on it here because, as I mentioned, I do think that it goes lower, but I still think that it's cheap. This is now trading at 10 times next year's earnings. 10 times next year's earnings. This company's got free cash flow, a lot of it, and it's still trading the way that it is. The valuation here is just so stupid cheap, in my opinion. You compare it to some of the other tech companies that are out there, and they're not sniffing anywhere near this number. A FANG stock at 10 times? Are you kidding me? And yeah, there's a lot of people making jokes about Mark Zuckerberg dumping a bunch of money into the metaverse and thinking that it's a big fat joke. I'm here to tell you it ain't. Web3 isn't going anywhere, and Meta is investing heavily in it. And I think that they're going to come out on top. So for those reasons, it's legit. And again, this is me telling you that it could go lower, but it's still legit in my opinion. Should have legit on Affirm. Oh man. Affirm has been a tough one as well. It is seemingly bottomed out at around the $17, $16 area. Right around here. They have earnings this week as well, and that's going to be very telling. We've seen a huge increase in credit card debt, record credit card debt actually, and Affirm could actually do well because of that. I'm not sitting here and I'm not going to tell you that it's going to go nuts, but it looks as if that bottom it has come in at $16. And I think that we could see this has decent risk reward in my opinion. So I think this is actually legit. I think the buy now, pay later model is actually here to stay. It's not going anywhere. And Affirm is at the forefront of this. So I still like it actually. Karem asking about two of them. I'm going to choose one and I'm going to go after Unity. Take a look at that stock right now. So Unity Software is down 80% over the last 52 weeks. It's down 78% since the beginning of the year. And it is just continuing to get crushed. It still hasn't really found the bottom. It had a 52-week low just a week ago. And so in my opinion, I don't think it's anywhere near the bottom yet. Growth is certainly there, Revenue growth is year over year is at 30%. That is nothing to sneeze at. And I think that that's actually very promising, but they still can't make, they're still not making any money. Earnings are expected to be at a loss of 15 cents. And just in this environment with a $326 million in revenue, it's just not where it needs to be to actually make it worth buying just yet. If you have a longer time horizon, I think that you'll be fine. Short interest is high on this, 16% short interest. So maybe you could get a decent squeeze out of it. But I just don't see a real bottom on this just yet. Again, it may just depend on your time horizon, but I don't like Unity right now. I think for at least a short term, it's shit until they give us a reason to buy it. Right now, they're just not giving me anything to actually like so far. Don checking in. I will be wrong as Tom Nash on Palantir before I sell Meta. I love that. That is hilarious. Ivan Broski talking about Meta going to the 70s. And yeah, that's what I had mentioned. I said that Meta has the ability to go to 72, 71 area. So that's something that I think is worth noting. Snooker says, well said on Meta. Yeah. Don said, no way it doesn't blow up. Yeah. Meta, $60 before 2024. Really? Oh my God. Shit or legit on Uber. I hate Uber. I hate it. They can't make money in any environment. Period. Pre-COVID, they didn't know how to make money. Post-COVID, during COVID, they didn't know how to make money. Post-COVID, they still don't know how to make money. Uber is a trash company, in my opinion. They're not going anywhere. They're going to get destroyed by the robo-taxi if it ever comes. This has got 11 upward revisions, 14 down. Estimated earnings per share is at 6 cents per share. $8.12 billion in revenue is the estimate there as well. I don't like it at all. Year to date, the stock's down 40%. And this is just, I don't know. They still can't figure it out. They still can't figure it out. Yes, Darwin, they are. They are. Oh, Jesus. All right, revisiting Avis. If you guys are just tuning in, that is a very interesting screen name, by the way. Love that name. That is hilarious. Avis budget came in and crushed earnings per share. They came in at $21.70. The estimate was at $14.63. They also beat on revenue. The stock's up only around 5.73% now. It was up as much as 8%, so it's giving back some of those gains, but Avis just absolutely annihilated those earnings, which honestly is mind-blowing to me. Last one, Ivan Broski asking about Disney. Disney is it's really tough because there's two parts to this, right? The parks, which is their biggest revenue driver pre-COVID, and has now started to come back to being their biggest revenue driver. But then you have Disney Plus as well. That's still costing them a ton of money to continue to crank out content. But if you combine Disney Plus along with Hulu and ESPN Plus, and their other streaming services, they are now bigger than Netflix. It didn't take them long. It took them 2 whole years, right? 2.5 years. God, it's so crazy how much time flies. I remember covering Disney Plus on this channel when it first got kicked off, and that was a crazy day. But looking at this, I think that Disney's still legit for the reasons nothing more than the fact that it's fucking Disney, right? I mean, look, the recession could impact Disney parks, and I think that's worth noting. But recently, Disney's price action has been influenced by Disney Plus. And if they grow in any kind of capacity in which, and Netflix has grown this past quarter, I think Disney stands to actually do quite well. Just closed over the 50-day moving average for the first time in a while. I think the momentum is certainly on its side. We saw a decent double bottom here at $90 a share, closed at 106 today. And I like it. I think it's legit. I just, my only hesitation on this is the parks. So that's going to be the real struggle for me. That is the risk, right? So that's going to do it for today's show, guys. Thanks so much for tuning in. Hopefully I won't have this green screen for too much longer. We got to do what we got to do, but you guys know how I feel about my green screens. Don loves them. He's better at them than I am, though. I don't know why. He can just pull it off. But that's going to do it for me, guys. Thanks so much for tuning in. I certainly would appreciate it if you would hit that like button on your way out the door, as well as checking out the link in the chat. Go to patreon.com/ownthechaos to become part of the crew and get your Stockwatch Sunday watch list as well as portfolio reviews. You get access to our Discord, which is a ton of fun, and it's all $5 a month. I mean, it really doesn't break the bank, right? It's just enough to say, hey, Brad, I appreciate you and what you do. And guys, I would thank you so much for all that. And also just thanks for watching me. I certainly appreciate it, guys. We'll be back tomorrow at 3:45 p.m. Eastern time to do it all over again. Tomorrow, we're going to be covering earnings from, as I'd mentioned, we had Airbnb. I believe AMD is tomorrow as well. And then we have, AMD, Devon Energy, Airbnb, McKesson, pharmaceutical company. Pre-market tomorrow, SoFi, Uber, Pfizer, BP, Marathon Oil, Eli Lilly, Toyota, and many others. So we might react to some of those in the morning as well. That's going to do it for today's show, guys. Thanks so much for tuning in. I'll catch you all tomorrow. Peace.